Hello Sector Watchers, this is the 43rd episode of Sector Spotlight on Tuesday the 11th of August, recorded on the 10th. For those of you who don't know me, welcome to the show. My name is Julius de Kempenaer and I'm your host today. And for our regulars, welcome back. I'm glad you're joining me again. Today we'll be looking at the rotations of asset classes and US sectors as usual, and then focus a bit more on the combination of rotations for materials, discretionary, communication services and technology. After the break we'll have a quick look at the performance of our long and short baskets, and I will show you a few tricks in YouTube that may help you watch Sector Spotlight more easily. I only just found out these possibilities, so I hope I can show you something you don't already know. I love to hear from you, so if you watch the show on YouTube, please don't forget to like the video, or even better, share your thoughts, ideas, suggestions, etc. in the comment section. I'm always on the lookout for new ideas that I can cover in an upcoming episode of Sector Spotlight. So don't be shy, your feedback is appreciated. Now let's get started. What happened last week? Let's start with the asset classes that are on the left side of the screen. As usual, we have the RRGs for the asset classes and the sectors on a daily basis for the last 5 trading days. So that's closing on last Friday. That was the 7th of August. If we look at asset classes, our benchmark, let's start with that, ended up 1.6%. And the biggest component of that asset class, stocks, ended up 2.6%, and government bonds had a negative 20 basis points. The other asset classes are not included in our benchmark, but nevertheless are interesting to keep an eye on. The DJP, that's the Bloomberg Commodity Index, up 3%, so a good week. And the GSG, that's the GSCI Commodity Index, up 1.5%, so it's also a pretty good week. But if you look at the tails, especially for DJP, it's very visible here. That started to roll over. And if we look at GSG, that also rolled over and hooked back down towards the lagging quadrant. The fixed income stuff remains relatively weak. And if we have a quick look at the tails of stocks, then you see that they have curled up. So the tail shortened, and now they have curled up in the last few days or basically during last week. So that's good news for stocks. And if we do the same for the government bonds, then we see the opposite rotation, where they started the week pretty good and then ended back into the lagging quadrant. So the tails of stocks and bonds are now rotating back in favor of stocks again. Let's quickly put that into a weekly perspective on this RRG while we're at it. And you can see here stocks, they are inside leading, they're pushing further into leading, but they are losing momentum still. So that is still sort of a under the hood warning signal. I'd rather see stocks moving in that northeasterly direction between 0 and 90 degrees. That's not the case yet. Maybe that improvement on the daily will make that weekly tail start to move up again. And we see the opposite with government bonds. They're inside lagging, but as you can see, they're picking up on the momentum scale, despite that they're moving further to the left, i.e. lower on the RS ratio scale. So it remains a little bit of a battle, but the daily RRG suggests that at least in the near term, stocks will be doing well, because they have turned back into that 0 to 90 degree heading, while government bonds have rolled over back into that 180 to 270 degree heading. We're going to keep an eye on it, but for now, again, stocks are the preferred asset classes, at least in the next couple of days. Let's move to what happened in sectors. Again, this chart, daily RRG, also ending last Friday. And we can see here SPY 2.5% in line with ITOT, not surprisingly. And we had a pretty broad participation in the outperforming sectors. Leading last week was industrials, which is pretty good. as well as financials, energy, and then we have communication services and technology picking up pace again. And consumer discretionary is matching what's happening in the S&P 500, and underperformance was there for materials, staples, utilities, healthcare, and real estate. Now we all know that that's simple 5-day performance or 1-week performance. It's not necessarily a guidance for the bigger trends. So what I wanted to do is to actually put a little bit into perspective and look at the rotations of a few individual sectors, 4 to be exact. So in order to do that, I'm going to bring here the S&P for, I'm gonna duplicate this screen here and make it a daily. So we can zoom in, and here I'm going to work on a regular chart. Now, if we go back to that weekly RRG, so it's a little bit longer term than, and I wrote an article on that today. It was published earlier today in the RRG blog. Here it is, sector rotation from materials and discretionary to tech and communication. Obviously, I wrote this during European market hours, and then the US stock market opened, and obviously it went immediately against me because materials and discretionary were doing pretty well, and tech and communication were not having a very good day. This is Monday that I'm recording it. But nevertheless, I'm going to stick with what I see on the charts and on the RRG, and not have one little day or one day with some little movement cloud my judgment and what I actually see happening. When I started writing that article, I was looking at this RRG, and what I noted is that there are 4 sectors at the right hand side of the plot, and all the others are on the left hand side. So there's 4 and 7 are on the other side. Now obviously technology, which is the big one, is on the right hand side, and it's far on the right hand side. And because this is a closed universe, the sum of all the distances from the center to the last observations weighted by market capitalization should balance out to 0. And that's why when you have 4, including technology, at the right hand side, there must be more on the left hand side to keep those scales in balance. Now, on the right hand side means that they are in a relative uptrend. Let there be no doubt about it. But they're on the right hand side, they're in relative uptrends, but all their weekly tails are pointing lower. They are pointing into that southwesterly direction. And here's the chart ending last Friday. So this is the week beginning August 3 that ended on August 7. And what I then did is I went to the daily chart, to the daily RRG, and then this is what you see. And let me highlight that because it's XLB, XLY, XLC, and XLK. So I'm gonna zoom in on those 4. So it's XLB, XLC, XLK, and XLY. And here are the daily tails for those 4 sectors. And then you can see that materials and discretionary are inside leading and rolling over, and they are inside weakening, heading towards lagging, and materials is actually with a very long tail heading into lagging, already into lagging. This is including today. So this was last Friday. This is at the end of today, Monday. Now for technology and communication services, they are inside weakening, but as you can see, pretty far to the right. And if you look at the daily tails, you can see that technology and communication services are actually picking up again. They started to improve somewhere here. So that's at the beginning of last week. So all week was pretty good for communication services and technology. Now let's have a look at the proper charts, and let's start with materials, which is inside leading on the weekly and just headed into lagging on the daily. Let me bring up my sector spotlight chart list, and here is the materials. So here's the annotated chart. As you can see, we broke out of that horizontal resistance, above that horizontal resistance, and that's a strong sign. That's good. Where it's struggling is in the relative strength department, and that's what you see here on that daily scale. You see that struggle on relative strength, that rolling over of momentum, that flattening of RS ratio is causing that tail to move into the lagging quadrant. But with the weekly tail inside leading, I'm going to give this the benefit of the doubt. It's still one of the stronger sectors on the weekly, on the longer term, and that's underscored by that breakout on the weekly price chart. So I'm going to assume that XLC and XLK are a little bit further ahead in the process than materials and discretionary. Let's quickly bring up the discretionary chart so we can see the difference between materials and discretionary. We see that here's also a break, but it already rallied further, so there's a lot more follow through that happened on that consumer discretionary chart, and you also see that that relative strength is pushing further ahead after breaking above that horizontal resistance. If we bring that to that daily chart, you can see it here. There's even a pretty good chance that this tail will turn inside weakening, but even if it doesn't and rotates through lagging, improving back to leading, I think that that position on the weekly RRG, which is relatively high, gives us enough room and a strong enough price chart to stick with this sector and see the short-term weakness as a short-term hiccup or a pause within that longer-term trend, so that that shorter-term tail can turn this weekly tail back up into leading through weakening. And there is plenty of room for XLY to go through some sort of a reaction after that break without hurting that trend. XLC and XLK are different. These are the sectors that have been doing very, very well recently, and also here strong breakout, no doubt about it. And then here we see that break out of that range on the relative strength chart. After that break, it sort of stalled. That rally didn't get a real follow through. It remained above that breakout level, which is good, but we didn't get the relative follow through, and that's causing that RS momentum line to roll over and saw that peak in the RS ratio. However, that trend in price is pretty strong, so it's keeping XLC here, although the relative is moving lower. And if we move that to the daily chart, you can see that XLC has actually started to pick up. And you can see also here that last little nudge, that last week has started to pick up again. So I'm going to see this rotation for communication services going back towards the leading quadrant, basically joining the weekly tail or turning that weekly tail around through weakening. So this daily needs to continue towards leading, and if that happens and relative strength here stays above its resistance, now support, if that price rally holds up, then I'm going to assume that this tail here will curl up relatively soon and go back into the leading quadrant, and communication services will be one of the leading sectors again. Just like technology, which is measured on the RS ratio scale, still the strongest sector in the universe, despite that little hiccup. And I've scrolled this chart back to last Friday, but if we bring in today's, so Monday the 10th price action, you see that both these sectors have actually started to roll up. Although it's only one day, so a lot can happen, but this price action here already causes that tail to hook back up. Let me zoom that in for you so you can actually have a better look at that. You can see that So technology was already, you see that the tail, it's cool to see. So this tail, 1, 2, 3 back, already last week was almost nothing in terms of negative. And now we go back. So that shortening of the tail is preceding that hook back up. So again, here's technology. We all seen that chart a million times. Super strong net strength, super strong price chart. RS ratio still at high levels but stable. That's indicated by RS momentum hovering around the 100 line, and that's what we see here. Technology picking up, very short tail on its way back. If this tail here can continue throughout this week further, then I do think that we will see technology, just like communication services, rode back towards the leading quadrant and remain among the leading sectors. Materials and discretionary probably need a little bit more time to complete that rotation, but their charts, the price charts especially, look pretty good. So these sectors remain on the watch list as being the stronger sectors in the US stock universe. Let's leave it at that for sectors and asset classes for this week. We're going to a quick break right now, and after that we'll have a look at the long-short portfolios that we're maintaining, and I hope that I can give you a little trick on YouTube to watch these videos. Stay with me, we'll be back in a minute. And we're back. I actually just noticed that the mailbag segment, which comes after this, ended up a little bit longer than I anticipated. So my idea of going over all the positions that we have in our long-short baskets, probably too short in time to do that extensively. So we're going to do what we can do right now, and I will need to write up what we cannot cover right now. As you know, we are maintaining these long and short baskets. This is the RRG of the current positions. And what I did is I actually put all those positions in a portfolio management system to keep. I was keeping track of it on a spreadsheet. That didn't really work, so I decided to do a little bit of work and put all the trade dates into a system, and now it's going to be maintained automatically until I change it, of course. So on the long side, we have Freeport McMoran, we've got XLV, the healthcare sector, we've got iShares Europe, IEV, we got Materials, XLB, and we got Sealed Air. And on the short side, we have Allstate, XLE, we've got the Hong Kong ETF, we've got NiceSource, Utilities, and we got PayPal. And you can look at those numbers. I'll deal with that in the write-up a little bit more in depth. You can see where we entered the position and where we are right now. So PayPal is the biggest bleeder at the moment. But if we look at the overall performance, then we're ahead. And I realize that these numbers are hard to read. I didn't quickly find how I could enhance those numbers, if at all possible. But this level is 3%, this is 4%, this is 3%, and we started at 0, so we're like up a little bit over 3% since we started this portfolio. The most important things that I want to deal with are the healthcare ETF and the iShares Europe, because they are really not doing as intended. I was anticipating Europe to outperform the US, and as you can see on this tail, that is not happening. So the IEV position on the long side that needs to go. We're going to cut our losses on that one because it's just not working. And the same goes for the healthcare ETF, XLV. When we entered the position, it looked as if XLV was going to outperform. That's not really happening in terms of relative strength. That XLV chart itself is still pretty good. If we look at XLV here on that chart, then we have little time, and now we do this. That's great. XLV. We see that break, so that's still good, but you see that the relative strength is not really enticing. It's not really good. And the same goes for the IEV position, the IEV ETF. It's rallying, but it's losing relative strength. It's not outperforming the S&P 500, where we are sort of based against. It's not a fantastic return, but we're up about 3% in a few months, I should say. So we're going to continue, try to improve the process. I'm going to talk you through it. And as I said, I will do a write-up, come up with 2 new long positions, because we do need 2 new long positions after we killed XLV and IEV, and have a thorough look at what we have on the short side. We're going to quickly move over to the mailbag section, which will run until the end of Sector Spotlight. In this segment of the mailbag, I want to get back to a number of questions that I received in past months. Some of them are on the shelf for a while. I have pretty much answered everybody who asked me a question over the mail personally. So if I haven't answered your question yet, don't hesitate to ping me, because then it probably slipped through the cracks. If you have any other questions, feel free to drop me an email, because I love talking about stuff that you actually want to know. I can come up with a ton of ideas, but it doesn't necessarily mean that that's what you want to hear from me. So I always love to hear your comments and requests. Now, what I did here is I clustered a number of questions because they were around the same subject. Someone said, I don't have time to watch a 30-minute video. And someone said, I cannot always watch a video, but I can read. And I can actually relate to that, honestly, 100%. There are so many times when I'm in a room with my wife and daughter, and they're either watching TV or having a conversation or whatever, and I'm reading stuff on my iPad, and you can't really put on a video. Well, maybe if you put in headphones, but I usually don't do that. But I can read an article, so I can totally understand where this question is coming from. Or what someone also asked me, I can't hear very well, is there a transcript? Now, the good news is, so I did some digging, that actually a lot of those items can be addressed through YouTube itself. If we bring up the page here, and we go to you can go to StockCharts TV, actually go to the YouTube channel, because we do need to be on the YouTube channel for this. Let's take a very cool show on StockCharts.com. Let's look at Sector Spotlight. This guy does this. Oh, yeah. We immediately got. I'm gonna skip this. I'm gonna put my sound lower, and I'm actually going to put it at the beginning. All right, I'll let this play for a little while. I have switched off the sound right now, because otherwise it'll be blaring through my microphone. After this beginning, let's stop it right here. The first question, let's do it differently. I can watch videos. I cannot always watch videos, but I can read. Well, if you can read, you can watch and read at the same time, because there's this button here that says subtitles or closed captions, And if you switch that on, so 42nd episode of Sector Spotlight. That was not good. I have something that I wanted to show you later. Let's pretend as if that did not happen. You can hear me talk. Welcome to the show. My name is Julius de Kempenaer and I'm your host today. Well, the name is not picked up very well. Welcome back. I'm glad you're joining me again. If you're in a room with people, you can actually turn down the volume and you can still read the subtitles and look at what I'm talking about. So let's scroll further ahead and you can watch the screen, you can see the cursor movement, and you can read my text. So that is if you're in a room and you can't really put on the volume or you don't have any headphones. Now the other question or remark came from someone about a hearing problem. Well, this could be a solution to that, but there's also actually the possibility to open a transcript. And then you will see the exact same as that. You can see it here. And it will actually be, it will be timed where I am talking. So if I put on the volume again, had started or were in place at the start of the week, have continued in that same direction. Maybe the most important one is, so this is Friday. So there you go. So you can actually read it on two different places. If you really want to have a written transcript, then let me pause this for a second. You could actually just copy that whole text and put that into some document and have it, read it. I mean, the sentences are relatively short, but you can read the whole text auto-generated by YouTube. Now the last thing is something that I also recognize very well, is I don't have time to watch a 30-minute video. Now, one of the features that YouTube has is the playback speed, and I already gave away a little bit too early. Right now, it is at normal speed. Stocks ITOT had curled down, and that's just me talking at normal speed. We can put that to, let's say, 1.5, and let's see what happens now. That new move for stocks and preference of stocks. So you see that they actually continued in that direction, pretty much all of them. So what does that leave us for the near term, because we're looking at the daily chart here, for coming week? When I found this out, it sounds a little bit funny, but you can actually follow pretty well the storyline, and you can even speed it up to 1.75 goes to 2, and then becomes really fast. But let's do it at 1.75. As you know, it's recorded on Monday, the 3rd of August. You're watching this on Tuesday, so we're already well into the week then. And I'd say that we can expect a pretty good week for commodities. Real estate seems to continue well, and as a matter of fact, it looks pretty good for. So here you go. There's 3 little tricks: a transcript, switch on the closed captions, and speed up the playback, and you can actually watch Sector Spotlight in under 15 minutes. If that's going to help you, please let me know in the comments below. If you have any other questions or want to discuss, look at the questions below. We can see it here. I am actually replying to those questions to everybody, and I love to engage in that discussion. Hopefully I'll be meeting you down there very soon. And that was it, ladies and gentlemen. This wraps up Sector Spotlight for today. Thank you for watching. If you liked the video, please do your thumb magic and the likes, etc. Questions, go into the comments and you will find my answers there as well, when required, of course. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, with replays on the StockCharts YouTube channel. For now, please stay safe, and I hope to see you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.